And first up, stock of the day. Thought we'd take a look at Stockland. Stockland's full-year net profit announced this morning, up 20% to just under $1 billion. Net funds from operations have risen 10%. Funds from operations per security came in at 36.9 cents. FY27, the property group's forecasting between 38 cents and 39 cents a security. Also, distribution was forecast at 25.2 cents. Stockland says the group achieved record development settlement volume, sales rising 53%, and it maintained a disciplined capital management. And we'll be speaking with the Stockland Chief Executive Tarun Gupta at 3 p.m. today. Henry, what do you think of the result?
Well, I guess as Mark Twain once famously said, rumours of my death have been exaggerated, and this one was sold down and has been on a trajectory downwards for some time on the back of the property market and the perceived weakness in the property market having an impact on Stockland. But this one has really kind of shot the lights out in that respect. And again, this goes back to what we were saying previously, Koshi. A 12-13% move in a REIT. These things are supposed to be relatively stable. These
boring.
These are distribution. They're boring. Yeah, that's the word. They're boring. But we've seen they are anything but at the moment. The numbers came in at the top end of the range, which is clearly good. And there's clearly a big collective sigh of relief, I guess, in terms of the numbers there, and the effect that the property market has had on them. They've had 9,000 settlements across its master planned communities and their land lease businesses, which clearly is good. And I guess it's about managing what you can manage, and these guys seem to be managing what they can manage well. There's obviously headwinds in the housing sector. There's headwinds in terms of higher rates and lower bond markets, but higher rates in terms of the yields. So it's interesting to see the move today. It's kind of back to where it was in mid-March. But it just goes to show that despite the fact that it's supposedly a boring stock, well followed by a lot of analysts, there are still surprises out there. It's really not my kind of stock, and after this sort of reset, I guess it's probably a hold from here. But they should be dull. They should be boring. They should not have 12.5% moves in a day on results. So. Clearly the analysts aren't really doing what they're supposed to do, and maybe the whispers that companies put out to analysts, which has been traditionally kind of how they massage the expectations, that back channel, as we've seen with back channels and other issues, not really working that well. But I think at 455, I think they're obviously a hold up here. I wouldn't be surprised to see it kick a little bit higher as a few people look at their spreadsheets and go, what, maybe there's a bit more growth here than we thought, and maybe Mark Twain was right after all.
Okay. Andrew, what do you think of Stockland?
Yeah, the result was okay. They've been sold down a lot because of that perceived residential exposure. It's not perceived, it's actual, but they've got lots of other tools in the toolbox as well, logistics and shopping centres, etc. And interestingly, their guidance was 6% higher at the midpoint than what the market was expecting. So to Henry's point, they weren't whispering enough, obviously, and that's why we're seeing a bit of a kick today. I think the fears from the housing market has certainly been well and truly overdone. And so I think it's a hold as well, in part because of the kick today. Unsurprisingly, Koshi, I would suggest that if clients want REIT exposure, rather than trying to work out, or listener or viewer exposure, I should say, rather than trying to work out, is Stockland better than Dexus or better than Charter Hall, you just buy something like VAP from Vanguard, VAP, which owns all 28, 29, eats all of those REITs. The issue being, of course, it's got Charter Hall in there as well. Not Charter Hall, it's got Goodman Group in there rather as well, which is 60 to 70% of that index, and then you bring in data centres and all that type of thing on top of it. But look, I think it's.
So do you invest in that ETF?
Sorry.
Do you invest in that ETF? Would you buy that ETF?
Yeah, in our model portfolio, we've got VAP because so again, rather than trying to pick one over the other, we just go VAP, which literally is tracking the subsector of all the REITs.
Okay. All right, that's our stock of the day. A hold from both Henry and Andrew on Stockland.